you. I want to ask a question since you talked about affordability. There are some buyers who do not fall in traditional categories. For example, let's say you have business people who have lots of income, but they don't have W-2s. How are they treated compared to others that, I know, at least from my experience, banks are a bit more apt to maybe approve a person that can demonstrate their income on W-2s. But for people who are self-employed, who make the money, I mean, they have very solid businesses, they're making the money, but it doesn't show up on paper like the other businesses do. How are they treated in situations to determine their qualification and affordability for a home?
Okay, well, first, that's definitely a conversation you want to have with your loan officer, because there are different steps. We're working with a buyer right now that he has to make sure that his next year's or the 2014 taxes are filed. So that's a conversation to have with your loan officer, and it's very important. I mean, there's a lot out there as far as different mortgage different mortgage companies, but working with a local loan officer, then it does make the process easier, especially making sure that you get to the closing table. But that's a conversation you want to have very early on with your lender. And so, because we've closed many loans with self-employed people and people that don't have the W-2s, but there's other documentation that the lender will ask for and need for demonstration of that income. But it's certainly very possible and very easy to do, and that's definitely the first step you want to do when you start to think about purchasing a home is get input from that lender to see exactly what they are going to require based on your particular situation in how your income is structured.